in that aspect. For me, I mean, I've been planning for this since I've been buying gold. The only reason I was buying gold was waiting for a downturn. But I realized as well, gold might not be the best performer in that aspect. But we're talking about like the cost average game. And in our kind of community, we all kind of cost average in looking for financial freedom over a long-term period of time. And in that investment kind of philosophy, I mean, I get excited on downturns. I like I was saying on our stream last night that this is the fastest my dividends have ever grown. I think I've grown my dividends annually by $1,000 already in the first 6 months. So I mean, if that could be projected forward and you can grow your dividend by 2,000, I mean, a year annually, at the end of in a decade, you're going to be making 20K plus, but that's not going to continue. I mean, that's what people keep forgetting when the markets crash. So I'm one of those people that gets a lot less excited when the markets go up because it's fun to brag and be like, oh, look at all these capital gains. But at the end of the day, I mean, I'm not itching to buy into this market. This market's not going to fast track my retirement. So, I mean, it's trying to rewire your programming if this is the strategy you're trying to achieve, because too many people get caught up in the media and everything else. And like you're saying, right? Like I know people that took on the risk and bought Carnival Cruise at like $8 a share. Not my cup of tea, but they're doing exceptionally well. And I think sometimes you have to butt heads with the media because you'll never make money if everybody is on your side for a company. It's just not how it works. As Tesla's a good example, when it went down to that 170 and all that heat was going on, I mean, that was max pain. And that's where the truth started kind of falling away from what the company was actually going to achieve. And then it kind of overexploded to the other side. But in the long-term aspect of things, yeah, cost averaging is the only way to do it and getting your head out of the gutter. I know there's a big YouTuber in the dividend community by the name of PPC Ian. And he, I just think it's funny because he tries to block out all the news and he buys Starbucks every Monday. It's how he starts his Mondays. It doesn't care what the price is, just buy Starbucks. And in these markets, I'm still cost averaging in with dividends, but because I'm still waiting, and with all the market news going on and the fact that I built up a decent portfolio, I can ride the gains from here. Somebody that's new to investing, and this is the hard debate because people say, oh, well, you wouldn't buy Facebook up here. And I'm like, well, actually I would, and I have. Like, I mean, I buy for my family, my friends. I was buying my girlfriend Facebook in the 150s when it dropped. She crushed it, and then I bought her more because she's still cost averaging in when it hit 230. I think we got in at 227 or something. And people think that's nuts, but at the end of the day, it's like, yeah, but she doesn't have a huge portfolio yet. She's building it. So in her perspective of things, like she needs to cost average in. And if, yeah, sure, she's might be overpaying in the macro, but I mean, at least she's cost averaging at a level where her cost average right now is 175 in Facebook. And yeah, it's hard to bite that bullet. But if you're somebody like me that has a scale portfolio already, I mean, I wouldn't worry about throwing huge amounts of money in the market right now. I mean, you can just do what I'm doing, reinvest the dividends, build up cash and wait for the next dip. But if you're new to investing, like I wouldn't advise you from not buying into the market where it sits today, because yeah, it could drop, but you have zero exposure and you don't know what happens tomorrow. And I don't want to make a gamble on what might happen. So if the markets don't crash or don't have a second wind to the downside, I mean, it's nice to know I already have my positions fairly built out. So I'm still going to capitalize if it doesn't go down. But a lot of people don't realize that they're not going to have that opportunity because they don't have the exposure. Because I don't try and predict what the market's going to do. I mean, I might try and position myself in case it does something, but at the end of the day, I'm not going to bet like the whole farm on it. I'm not going to sit here on my hands and not do anything because I think it's going to crash. Like too many people get caught up in the media, and right now I think is a good definer of how good of an investor you're going to be with all this terrible news. And again, there's always deals. If you're looking, I think there's a big difference. And I want to ask you this as well. Are you an ETF investor? I think you go down the path of individual stocks as well, right? Which comes at its own risk. So if that game, it's a lot different, right? I mean, if you're buying ETFs, there's no concern. You're not playing the let's read the balance sheets because it's a stressful time. For somebody like me, I mean, for my companies that don't perform well, I kind of get my back up and a chip on my shoulder to make sure they're going to survive this. So I mean, you really have to start doing your due diligence because at the end of the day, I don't mind doing what Buffett did and take a loss on the airlines if it's not going to fit my long-term perspective. And I've been doing that with a lot of stocks, and I haven't sold any yet. But I have a few stocks in my portfolio that I question a lot. And one of the most interesting ones I think is the GEO Group, that prison company. Unbelievable balance sheet. I mean, if you take the balance sheet and the performance on the earnings and their revenues over the last 5 years and then just put it right next to the chart, it makes no sense. I mean, it has the most stable income of almost any REIT I've ever seen. Like, it slowly grows over time, incredible revenue, incredible stability in just the overall earnings. But the stock chart is so politically controlled. It's a roller coaster and a half. But I'm not going to get too down that path of spec plays because I don't want to start taking people into the dark world. Some of the morally debated stocks.